Good day. I am Chartered, your accounting tutor. In today's video and class, we are going to continue with end of accounting period adjustments. End of accounting period adjustment. One of the adjustments that is common is called bad debts. It's called bad debts. What is bad debts? Bad debts are debts owned by customers which are unrecoverable or can no longer be collected from the customers and are written off the books of accounts. Bad debts, these occur as a result of debts goods that are sold on credit to customers. At the end of the day, as customers try to pay, most of them are not able to pay all the debts that they own. So as a result of that, part of the money that's supposed to be collected by the business will no longer be collected, and they are considered as bad debts. And the bad debts, sometimes the business will keep them in the book, taking them forward year in, year out. As time comes, the business decided to write them off because they will not have faith that they will collect the debts again, and they are referred to as bad debt written off. That is, they are written off the books of account. They are not considered as debts again because debtors were unable to pay them. So types of bad debts. Here we are saying that bad debts that occur during the accounting period. These are bad debts that occur during the accounting period as the business is operating. Some of these debts occur, and as a matter of fact, they are kept in the books of account pending when debtors will pay. And then we also have bad debts that occur at the end of accounting period. Then during the accounting period, some of the debts occur. So at the year end too, some of the debts are still occur. So by the time you discover that debts have occurred at the end of the accounting period, most of them are then written off the accounts. But the ones that are found in the trial balance are the ones that occur during the accounting period, which are part of double entry. While the ones that appear in attachment information are the ones that occur at the end of the accounting period, and are differently. So the ones that are found in the trial balance are considered debts that occur during the during the trading period in the business. While at the end of the accounting period, some debt will still occur as the business tries to receive money from its customers. And that's why we have two types of bad debts. Know that the one in the trial balance is within the year, while this is at the end of the accounting period. Let's really see how they are treated in the ledger. I told you that all adjustments must be captured in the ledger such that they will be transferred in what is called the adjusted trial balance before they are written off the profit or loss account and also in the financial position. In the bad debt account, you now take the bad debts that appear in the trial balance, which is the one during the accounting period. You bring it, as you can see, 3,000. This is the one in the trial balance. You come and pick the one that occurred at the end of the accounting period, which was discovered in the books as the business was closing its account. You will still discover other bad debts again. They will call it bad debt from adjustment or additional information. You now add it with the one in the trial balance, getting 8,000 naira, which has become the total bad debt that will be taken to the profit or loss account. Then, in the financial statement of financial position, we have what is called the extract, what is called operating expenses. Bad debt is an expenses. Why? It's an expenses because these are debts that the business can no longer recover from customers. So as they are unable to recover the debt, it becomes an expenses to the business. Expenses are money sacrificed by the business by way of services or any means that the money decided to go out of the business is referred to as expenses. So bad debt, don't forget, is one of the operating expenses. But mind you, bad debt is different from what is called a provision for bad debt or allowances for expected losses. Don't confuse, I want to still emphasize, don't confuse bad debt to allowances for expected losses or what you call provision for bad debt. They are not the same, they are completely different. Bad debt is bad debt, and they are direct operating expenses written off in the profit and loss account. We are going to treat what is called provision for bad debt or what is called expected losses, allowances for expected credit losses. Please, I want to emphasize they are different. So bad debt is very straightforward. Both the bad debts in the trial balance and that of the one in additional information are all treated direct as operating expenses. If there are two, just like in my illustration here, add them together and get one figure and treat it as an operating expenses. If it is only one, the one in the trial balance, please don't forget to take it and use it as direct operating expense without no adjustment. If the one you found the one in the function giving, still pick it and use it direct as an operating expenses. But if the two are found, and that is the highest way you can see bad debt. If two bad debts are found in the question, the one in the trial balance, the one in the information, just put them together. As you can see, sum them up and use one total, and that still become a direct operating expenses without any other thing. Mind you, have emphasized, they are different from allowances for expected loss, what is called provision for bad debt. Let's see how we go to statement of financial position. Let's see how bad debt is adjusted here. Bad debts affect what is called account receivable. Account receivable, this is what we call debtors hitoto. Account receivable are the money that are owned by customers to the business. So the business is expected to receive money from it, that is sales on credit. So if there's bad debt, it means it's part of the customers that did not pay the debts, then it means the value that the business is expecting to receive from the customers will reduce. And that is why account receivable is one of the current assets. So you go under current assets, you pick the total of account receivable, which is 60,000, put on the first dollar side, then you pick the bad debt written off. But here I want to clarify, as you can see very clear, in the question we have two types of bad debts. Bad debts found in the trial balance and bad debt found in additional information. So bad debt found in the trial balance should not be deducted from the account receivable in the statement of financial position. Mind you, I'm still emphasizing, bad debt found in the trial balance should not be deducted from account receivable in statement of financial position. It should be bad debts found in the additional information that you take it and deduct from the total of account receivable under current assets in the statement of financial position to get the final answer, as you can see here. So that is why you have to know that there are two separate types of bad debts. The one found in the trial balance, which is like a brought forward, or which is in the current year, then it should not be deducted here. But the one that is created, found newly in the other information, that is the one that you deduct from the account receivable, because this one have already deducted, but this one is what is just arising, and that is why you have to deduct it from account receivable. So after deducting, the 55,000 becomes the balance that remained from account receivable. This is how bad debt is handled as adjustment in accounting and nothing more. I hope if you follow up my video, my class, all this adjustment, I promise you, will no problem to you, because I promise to be taking them one after another, bit by bit, and logically for you to have access to solve any problem you come across in accounting pertaining adjustment. Don't forget to like this video, comment and share as the lesson will go viral, so that people that have issues in accounting have no issue at all to trace any adjustment via accounting. I recommend share and comment the video and make sure the knowledge grew so that people have knowledge in accounting. I remain your accounting tutor, Chartered. See me in the next class.